The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 3rd of June. And we're looking at a situation that's quite fascinating. And let me tell you why. Because the chart of the Dow is saying that even though the 9-period moving average is still nicely above the 14, the action over the last few days has really been one of stalling. So it's kind of, in a sense, the fact that it's come back. You see the long tails right here in these little bars coming back from that 14-period exponential moving average every day for the last 4 days. Actually, today didn't get that low, but it was still down earlier in the early this morning. And now what we're looking at a situation where there's a possibility of an arching over. Now, if you look at the S&P, so the Dow is down 61 at 42,243. If you look at the S&P, look at this. Here's the S&P. It's not quite the same because you've got the candles are a little bit different, but it's still not going anywhere for the past 5 sessions. And I'm looking at this and I'm saying, I believe that this is, we'll know whether it's distribution or not if anytime this week there's a close above 6,005. And right now we're at 59.35, down 83 cents. So now it's down to 1.5. Now, what's really important about this particular pattern, and I've been saying for the last week, that we won't get selling pressure until there's something that is like what I call the dark news index. You need something sitting there so that the market closes down really sharply, like 500 points in the Dow, maybe 85 points in the S&P, and the NASDAQ is sharply lower because of the news, and it closes down sharply that day. Overnight, there's a bit of a rally, and it closes down overnight, and then the next day it opens very weak, and the news just permeates. It filters the news media. It just has to do that. So until we get this dark news enveloping this cloud over the market so that there's a theme that says tariffs or whatever it is, the sustained down move just doesn't really happen. It just doesn't happen. Buying comes in. So we're in this phase right now waiting for the news. The news has not come. So the Dow is down. Now Dow's down. Let me just do this one more time because we suddenly had selling pressure. INDU. It's now down 83. It was down 120 just a moment ago. The S&P was down deeper. Now it's down just 59 cents. The QQQ has pulled back some, but it's still up $1.26 at 524.50. The IWM, the Russell 2000, is up 30 cents at 206.02. Also took a little bit of a little dip, not a dive, but a dip. So what we're looking at, buying just keeps coming in until that theme says, ho, ho, ho. You want to be buying the dips? Watch what I can do. And the market just drops and drops and drops. And everyone who comes in is left holding the bag. We haven't got that yet. So even though I had said yesterday that we had started a short position on Friday, and then we added a little trading position to that. Yesterday, that got taken out for like a 1% loss. Not a bad deal when it's like insurance. And the other one, just for the moment, normally I would not do this. I don't believe in lowering your stop or your buy stop, whatever it is. Once you've set it in place, I think it should stay. I almost always have it stay. In this particular instance, just because we had one and it was just a very tiny loss, and even now, if the original stop on our short S&P is taken out, it's very small. It's a 3 times long. So you're having a 1% or 1.5% loss, even at 2% is just nothing because it's really more insurance. It'll only become a trend if the S&P, which is trading at 59.36 right now, actually drops 25 to 30 points and then cannot rally, but then doubles that to the downside later on in the day. I'm not seeing that right now. I'm seeing buying coming in, but I'm not seeing it's very selective. And that's why I said for subscribers, I'm trying, and we've managed to do it, is to stay with positions that are right in the sweet spot. And they're moving up very nicely. And I understand they're about to pull back because they kind of overbought. They haven't done so yet. But I don't want to be in the stocks that I say they should have a good 2025. I want to get in now. I'm prepared to wait. We've run out of the waiting time in this particular phase. That's all I'm saying. So I'm looking at this a little bit more aggressively in saying the longs have to keep working. And we've taken little bits off. Even today, we took a very nice 25% gain in one, a little bit, 14%, almost a brand new position. Well, not brand new, but a position we just recently got. And just trying to be very careful to manipulate, to manage the trades. So let me go back to what we were looking at before when I did the market update. I was saying the SMHs, now they're holding pretty darn nicely, up 253 at 245.92. And you can see they're in this range. But I've been talking about this potential for a series of double tops. Well, look at this. On a shorter term basis, you had a 249.44 high in the semis back at mid-May, pulled back somewhat to the 14-period moving average. They ran up to 249.21, just 23 cents away from that previous high. And yet it's not breaking down. It's just stalling. It's going sideways. So if the SMH is a semiconductor, Van Eck semiconductor ETF, is able to get to the 450, make it 452 to 453 area sometime this week, I'd be really impressed. That's about another 7 or 8 points higher. That'll be fantastic action. Can it do it? Well, we'll see. I mean, it's a rotational thing. Let's see what NVIDIA is doing. NVIDIA, leader of the bunch, up 3.70 at 141.09. It's the same thing. Look, just nominal new highs, but it is making highs, and the 9-period moving average is walking the 9. It's not even touching the 14. That's still very positive. The MACD is just barely positive. The retro strength, the gray line right here, this is a daily chart, is good. It's not great. The stochastics dropped under 80% to 74%. The on-balance volume is not that strong. Well, it's not. Let me put it this way. It's not near the highs. So that's interesting. So the 9 is the leader. I've talked about this. How many times have I mentioned this incredible 914 tool? If you can use this and you can stay in positions based on this, it can keep you in a trade longer than your emotion is saying, hey, I got to get out. Because this is very strong. So the SMHs, I'm pleased to say that it's acting extremely well. And NVIDIA, the leader, is doing well as well. 153.13 was the all-time high. And the month that it made it in January of this year, it also had 136 round number open. It's unusual for markets to do that. And then it dropped very sharply to about the 86.62 low of the 17th of April. And look at this nice candle that was made in May. Now we're into June, so we'll see what happens next. So all in all, Dow's down 66. S&P's come back, is now up 354. Basil, Chapman, Technicians Hour. Got a lot of questions. I'll try to get to them. See you in a few minutes. And we'll see whether the gold and silver.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So I said I wanted to go through some questions that I had from yesterday and today that I hadn't finished. So I've just grabbed Disney because I was asked about it yesterday, and I said it was trading at about 100 and let me just check that out. 100, I think it was about 112. 80, something like that. And I said, yeah, you could start a little bit here because it's a longer term position. Everything about it is good. Only my emotion is saying that we should have some kind of a digestive phase coming up. And that's not good enough. It's walking the 9-period moving average. It hasn't broken the gap that was made from around about the 12th or so, when that second big gap. It's acting well. So start a small position, and if it takes out the high of the day, either today or tomorrow, that would be where I would try add another very small position. This is the question was, is this the time to buy Disney? And I said that at this particular point, the way it's pushing away away from the 200-period exponential moving average, other than the fact that visually it looks very suspended in the air because it's had such big moves. It doesn't know that. Remember, the chart, the stock is just the stock. It doesn't know that it's suspended in the air. So the chart is, and here it is up $1.14 today at 114.08. So once again, all I can say is that as a longer term position, it's very difficult to say this is the time to buy because the 118s, that's the double top area from the end of last year to the beginning of this year. So that would be the first target. If it breaks that, 122. But in the interim, it could actually slide to the 200-period moving average of 102. That's a 10%, 11% correction. So all I can say is go for it one step at a time. So this is, now you can treat your core as the 112, and the 114, where it is now, says that's maybe your trading position. You can take little profits, and then at any point, if everything gets taken out, you've already garnered some money, and that can be like your kitty for the next big entry in this. But I would just go one step at a time. I'd say, I have no idea whether this is going to tank because of the market. This is the beginning of the summer. This is the holiday season. Other than the media part of Disney, that part of it should do pretty well. And just go from there. The chart is telling you that it's acting well. The way that it's gapped up and held for 3 weeks, this is the 4th week now that it's above the 200-period moving average after the gap is still extremely positive. So I hope that answers the question from yesterday. I said I would try to follow through today. I've just done that. Where would I put a stop? I said I would have a, did I say 5.4 point or 5-point stop? I said initially. So what I would do on the trading position, if you did do, if you treat it as a recommendation and you followed it, and the moment it took out yesterday's high of 113.35 goes to 34. You put your position on, so now you're up about 70 cents. I would just say to you, treat this as have a different stop on the shorter term position, because that's on your very near term position, because that's your trading position. But it is nicely, if we can close nicely over the double tops that were made at 113.41 on the 14th and 113.44 on the 16th. And then it retested at 113.40. That was on the 20th. As long as it can close nicely above that, it's telling you that it's just pushing away from the potential little triple top over there. So, hope that helps you. I just wanted to do quickly a 120-minute chart. Let's do it that way. Peak A, peak B, another peak A. No, that's a C, that's a D. And it's gone to an E. But this E could, in fact, be the start of another move, so I like it very much. The MACD is positive. The stochastic actually is only at 77%. If in this move, the stochastic goes to 80% in the 120-minute chart, that's another big boost to the upside. And the on-balance volume is performing very nicely. And 9's way over the 14. Yeah, I hope that helps you. And just... there's nothing you can do because you got in way above the 80 level, lowish, about 80 in April, and here it is at 114. I mean, there's 34 points above it. So it's unusual to start the position here when you've had such a big move and then expect it to be an intermediate term move without a pretty sharp pullback in the interim. So all I'm saying is go one step at a time. This is working. Next thing was GDX. Got to look at GDX. Yeah, the GDX had a huge move yesterday, but look at this, what it's given back. So it goes up to this 54. We went to 53.83 yesterday. Nice breakout above the high that was made back on the 21st of April at 53.25. Now it's given back half of that. I like the action very much. The 9 is way over the 14 and the price is way over the 9. The MACD is very strong. On-balance volume is strong, not as strong as it was in the big move back in April, but it's increasing, and that's good. And the on-balance volume isn't overbought, but it's good. And the stochastic flat at 94% is exactly what you would want when you are looking at long positions. And so far, that's good. You finally did get, I said, I don't know how it's going to do that, but there's a chance that in the Chapman wave methodology, buy signals go to buy modes, and they go to, that means it should go to at least peak, the 4th peak, peak 4, which is D, and there it is at D. And you've got now an F in the, this could even be maybe an alternate count F/B because everything's so positive. But I am going to say to you that right here is where the proof of the pudding is. Does it come back to the 51 to 50 level and then stall? Or is this just a 1 or 2 day breather and then it breaks to the 54.80 area? That'll be really positive. The SLV, which is the silver, SLV, hasn't yet made that high. We were looking for a double top, and that was at the 31.70. 3180 area. Yeah, 3180 was the high the week of the October the 25th. I'm anticipating that it gets there. This is leg D now, finally. Look at I love these rectangle formations. It's amazing how the price performs within this large rectangle. Finally, you did get that D. There it is, D. And what's really important about this is that the MACD finally turned up again. Stochastic needs to get to 80% to 72%. So that's a little bit of a worry. But look how it's walking the 9-period moving average. And this is, look, peak A, peak B, another A right here. Because this is your starting point. Remember, this is the arrow, up arrow right there. Oops, up arrow. Well, there it is. Now I have to just move it across. I'm going to do this right here. I'm circling that up arrow to say that every peak above it needs to be counted. That's peak A, peak B, another A, and another A and a B. So this is already a C. Let me get there. Just do this as the music comes on for the break. A, B, C1, C2, and it goes to a D. All right, so you've got silver, and silver's acting really well. It's only down 26 cents at 31.33. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's only down 5 and S&P's up 9.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So high-grade copper is down a penny at 4.84 and had a really nice candle yesterday, but it's kind of given back some of that. I'm watching it closely because if high-grade copper actually gets into the fives, it's at 4.84 right now, gets into the fives, that's going to be quite positive. Okay. And then another thing that we're looking at is Bitcoin. Bitcoin is up 1580. It sounds fantastic, but actually it's had quite a pullback from the 113,060 level, which is the double top from December of 2024 at 112,635. It's pulled back a little bit, but it's been 1, 2, 3, 4, 5, 6 days of pullback when the market itself has tried to do quite nicely. How Bitcoin handles either the 102,000 level as support or breaks above, it's at 106,565, or breaks above 108,000, I'd say 108,750 is going to be very important right now. The fact that it's made this little double top is not a big deal. It's just taking a breather. It's still, the technicals are still very strong. Next question I had was, what is that? Yeah, so URNM, a whole bunch of talk about uranium. So uranium is having a nice session today. Sprott Uranium Miners ETF up 2.19 at 41.66. Now it's trying to push away from the 200-period exponential moving average. This is still only a leg A to the upside, spectacular A in the weekly chart, going from the 2760 low of the 11th of April, the week of the 11th of April, all the way to the high of last week, I would say 27 to 42.58. Nice, very good action. So that's uranium. SCCO, how's that doing? This is the Southern Copper. Yep, it's doing very nicely, but this one it was doing nicely. Now it's kind of stalled. Look at the way the 200-period moving average has been incredible resistance. Isn't that funny how that works? Big resistance. And what's the other one? I was CCJ. So this is Kavika Core. This is one of the best. This is at an E right here. The daily chart. It's up $1.57. We'll see if it's able to hold the gain. And it went right to the double top. So what I'm talking about, these double tops are potent. Look at this double top that was made the week of December the 6th at 62.55. What was the high just 6 sessions ago? 62.27. How about that? Within pennies of the previous high. So I'm looking at this and I'm saying there's a lot going on. Leadership. It's been fantastic. And the others have kind of been following. And then you couldn't really get, there are some, for instance, look, Palantir, I was asked about that. Look, Palantir had a spectacular move. It was the leader. It went all the way, and even yesterday, it went to a new all-time high at 131.70, today at 101.79, yep, 79, down 38 cents. Look at this. It went all the way to 134.48 yesterday, all-time high. So it took out 133.49. Was that correct? Yeah. Isn't that interesting? 133.49 the week of the 15th of May. 16th of May. And today it's right there. Oh, yesterday it was right there again. And we'll see what happens. So leadership has been spectacular. And someone just said, yeah, look at this. Hood is up just in the last week. Hood has been up huge. Look, here it is, Robinhood. And that was the 66. I was talking about this as a potential to look at maybe a double top. And no, it's gone above the 66.91 high of February the 10th, the week of the 10th of Feb, having tumbled to 29.66. And here it is at 70.17. Yeah, quite a bit above that previous high. But when you get double tops, you can go slightly higher. The higher it goes, the less chance that it becomes a double top. It becomes a brand new move to the upside. So far, there's a very good all-time high was that round number of 80. Oops, let me just move this across here. 85 round number high. Week of August the 21st tumbles down to $6.81. I would say a 90-something% decline is a problem. And then what is the double bottoms, and then screams to the long side. We have been long from the 16s. We had tried to have a position. We just got taken out, and that's very frustrating right there. And then it didn't dive back in, and I should have done that. But, yep, it's been very good. Robinhood. All right. So the next question came in about, AGEN. We were talking about that. Was it yesterday or the day before? Yeah, yesterday, AGEN. And all I can say is... we were looking, it was right here at the about 384 level or something. And I said, there's a chance that if it can get to the 406 level, it should go just a little bit higher. And then we're going to see whether or not it's able to hold that gain. But not only did it go high intraday, it went all the way to the 417, 416 area, and today it's spiked up to 497. It's trading right now at 495 in a leg D above. I didn't even mention, I don't know if I even mentioned the 200-period moving average because we were so far below it. But I was going to say, I don't know if I said it, but I would have said that if it's able to, at any time in the next week, get to 451, anywhere in the 450s, then that 466 200-period moving average would be a magnet. It did it all in two sessions, leg C in the weekly chart. So the question came in, we start to look at the left side from July the 14th of 2024. July. You're looking at that big peak there. That went all the way to 18. It went all the way to, 16.12. No, it did go to 18. It went to 1874. 1874. How does it all fit in? So it really depends, because it's a biotech. It depends on product. It depends on announcements. It depends on the FDA. The fact that it has sustained yesterday's move today, and so far it's holding it almost at the highs, is a really good sign. Let me go one step at a time. This is the high that I'd be looking at, the one of September the 20th of $6.53. So today's high is $5.03. Let's just go one step at a time. I'll draw in what I would consider to be a left side, right side potential right there. Yeah, let me do this during the break, and then we'll be back. Dow's up 6, S&P's up 9. Basil, Chapman, Tiger Emissions Hour. Very interesting session we've got here. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So thank you, Dan, for all the information about this company, Agenus Inc., immuno-oncology area. But I just wanted to mention that the stochastic actually went to 82% over the last couple of days, and that's in leg C. So the most important aspect about this is that with this stochastic over 80%, the MACD strong, the 9 over the 14, this is all very positive on the weekly chart, even though it's had a massive pullback from the 18s down to the below 2. So that's and it's a biotech. So biotech is very important. So all I'm going to say is that how it consolidates here is going to be important. This might be the spike that sees it stall, and if it closes under the 200 period moving average of 465 for more than 2 out of 3 sessions, I'd say 2 out of 3 sessions, but I would also say 2 consecutive out of the 3 is really important to close under that. That would be saying that it's kind of stalling. But yes, this is the start of something that's very important the way you explained it. Now, other thing that I want to look at here was, so a question came in. Basil, please explain on radio what parameters you use when you start a short position versus simply waiting for market pullback to buy more longs. Do you use the weekly charts? So, okay, with that question, that's a question I ask myself all the time. When are you going to do that? Normally, under these conditions right here, when the market, the Dow's actually a little bit weaker than the others, but I'll use the Dow as a demonstration. This is using time rather than price. And the longer you go sideways using time, the greater the chances are that it's distribution. And therefore, if you take out a left side load, making that dreaded H pattern, remember the lowercase h pattern? In this case, if the Dow closes under 41,354 over the next 2-3 days, 4 days maybe, that to me says, okay, now you've got your digestive phase. For the S&P, it's the same kind of stalling motion, except you were closer to the 5968.61 high that was made that said, if you look at the weekly chart and look at all these candles just stuck in this rectangle range, how it takes out the resistance is going to be very important. But most importantly, when I was looking last week at the chance of the S&P pulling back, and that was on Friday, going into Friday, the stochastic was just under 80%. MACD was good on the weekly chart of the S&P, and the 9 had just crossed positive, but I didn't get the price extension that said, okay, that means that we're going to go much higher. It could come, but it hadn't come. So that's the reason why I looked at it and I thought, as a shorter term position, there's a really good chance that if it takes out the low of the 23rd of May, which was at 57.67.41, and remember, we had some ugly candles both Thursday and Friday in the early morning, then you could get this H pattern. But as it stands right now, we've just made a gray peak A right there, gray A. I'll change the color in a minute, and a gray leg B right here. So that says, monitor this B, because if this B goes even just a little bit higher than the high, today's high is 59.4902. To get to 59.68.61, it could happen in a blink of an eye, or it could fail. So we're right on the cusp of doing this. So the reason why I was doing what I did is because of the daily charts leading to what was unfolding at the time in the weekly charts. But look at this. The QQQ made that peak D after the Chapman wave instant restart. And remember, I said G/C can very often make a V or a cup-shaped formation and then go to the D. After that D, you very often get a pullback. Well, we did get a little bit of a pullback, didn't get followed through yesterday, and today is acting well. So what I'm saying to you is that I start the position, and I would only add to the position. But in the bigger term, you know that this is a subscriber, you know that I have a list of stocks that we want to buy, and some of them got away. Some of them we actually had, like Chewy, and just got stopped out and just didn't get back in. Look at this Chewy. We're in the 37, 38 area. It has this one, I think to this day, I don't even know why it pulled back so sharply. It pulls back just to take us out, and then it goes ahead, and here it is at 47.56. So sometimes the timing is right, but the stop is a little too tight, and we get taken out, and that just leads to something like you've got in a stock like Chewy. So my answer to you is that I am looking for a decent. I can't give you percentage terms, but I'd say 6 to 8% pullback, if possible, to add to some of those positions that we either wanted to get in, did get in, get stopped out, and that's all. But the ones that we have that have done very well, just taking a tad or a smidge, as I said today, take a smidge off as money management, and that's it. So it's a good question, but I said to you, and you know that I've been saying this for over a week now, to get a sustained down move, you've got to have bad news that the market accepts as bad news, or you've got to get news that the market accepts as bad news, and it has to permeate the market. It starts off slowly, and then it just quickly accelerates, and that becomes the theme, and the market the selling pressure just continues. Until that happens, buying just keeps coming in. So the question is, can you see SOXX? SOXX, yes. So let me just do this because I did notate this for you before, Steve, but this is the, what is the full name of it? I always forget. SOXX is the iShares Semiconductor ETF. Now, I think this is a 2-to-1. Let me just check. So it's up 3.81, up 3.81%. SMHs are not up that percentage. SMHs are up 3.9, 1.64. Let me do that again. 1.64%. 1.84. Oh, I guess it's the same thing. All right. So the SOXX, look, this is the line that I drew before. I did this in the estimations, I believe. I'm going to do it now in the okay, right there. You see how this took out the trend line? Now, this is a Chapman 40 axe formation. It's taking quite a while to unfold. And if it unfolds in the way that the breakout of this trend line normally would be, then you'd get the cup formation. But you remember what I also like to do with all my trend lines, etc. I say it worked over here. It did its job. Now I can raise it. But it's a very positive sign that I can raise it because it says, aha, it's moving higher. So the fact that the SOXX, that's the iShares semiconductor ETF, is moving up 3.84 at 211.87. If it's able to get to by today's Tuesday, by Thursday, if it's trading above 216, that's going to be very good action because it'll retest the left side high.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Didn't realize the time was going by so quickly. So let me just do this. So Coinbase is trading very nicely here. The 9-period moving average is still strong. It bounced off the 14. There are signs that there's some weakening here. It did make a peak effort about 280, just under 280 a week and a half ago. I like it. But I think right now you need to see that it holds 238. If it goes under two, it's at 258 now. That's too much, 258. Let's just make it a little bit different. Today is having a big candle up 12 at 258.98. It's called 259. So if it closes below 253, so not even today's low, which was 246, if it closes under 253 in the next day or two without making another new recovery high, then it's a problem. But right now, it's trying to make a V-shaped pattern. So above 266 would be very positive. Other thing was HIMX, here we go. HIMX almost says there are so many charts with almost the same pattern. Holding well, 9's over the 14, but it's made a peak F. It's starting to stall a little bit. It needs to get over 875, and that'll be really positive. But it needs to hold 790. It's at 837 right now. 790 is the area of support. So let me just quickly update. So this is the Dow's now up 40, S&P's up 16. This is good action. It says that the bad news is there's no bad news right now that's affecting the market. Market goes down by itself on a purely corrective technical moment. That's not to do with bad news. So it needs that bad news to say, selling. We don't have that pressure. As long as you don't have that pressure, there's upward bias, and that's the reason why we remain long. But we do have the short position. We've got very tight stop. If it's taken out, it gets taken out. We'll have to try again some other time. But that was because Thursday going into early Friday, going into early Monday looked quite poor. So that was the reason for that. Meantime, have a great day. I'll see you. I'll be back with Tommy later on this afternoon. Stay tuned for Steve Rhodes and all the great programming. And if the Dow is able to hold a plus 60 or more after 1:30.